Hello guys, welcome to IS Traders. Name is Gabriel. In this video, we'll be talking about multi-time frame analysis. We'll be talking about what it is. We'll be talking about the importance of multi-time frame analysis to traders. We'll be looking at how to use it in your trading system, and also we'll be talking about selecting the proper multi-time frames for your trading system. Without wasting much of our time, let's get started. What is multi-time frame analysis? Multi-time frame analysis is a trading strategy where traders examine the same assets across different time frames to get or to gain a comprehensive understanding of each price movement. So it is simply analyzing or reading or examining a particular asset or pair or index or whatever you trade across different time frames to understand properly what its direction is, understand key levels, and also to determine potential entry and exit points more effectively. What are the importance of multi-time frame analysis? Why is multi-time frame analysis important, or how is it useful for traders? By integrating multi-time frame analysis into your trading strategies, traders can achieve a deep understanding of the market dynamics, improve their trading accuracy, and ultimately enhance their overall trading performance. All of these things are big grammars. Sorry about that. Just as you know, basically, once you understand or once you deal with price from top to bottom or from different time frames, you get to understand what the trend is from the higher frame. You get to understand what or where exactly to execute your trade from the lower time frame. That helps you to what minimize your risk and maximize your profit. One of the essential importance of multi-time analysis is for you to minimize your risk and then maximize your profit. It helps a lot in risk management and also helps a lot to build confidence in whatever decision you'll be making. So how it works, multi-time frame analysis is usually done from top to bottom. For you to understand how it works, you have to understand what it contains. All right, so it is usually done by starting from the higher time frame, which is the long term. Then you go to the medium time frame, which is the medium term, and then finally the lower time frame, which is always the short term. All right, so when you hop on the higher time frame, the purpose of the higher time frame is to help identify the overall trend of the particular asset or index or pair or whatever you're looking at. Medium time frame help you to refine the analysis by focusing on more detailed movement within the larger term. So when you have analysis or the direction from the daily or the monthly, what the medium time frame does is helps you to understand the movement that helps you that brought us to um that trend or that direction of the higher time frame. And the medium time frame comprises of the 1 hour and the 4 hour. Some people use the 5 hour, the 8 hours, the 7 hours, depending on how you can customize your trading view, right? And also the smaller time frame, which is primarily the entry time frame. So those are the smaller time frame that help us to understand the short term movement within price. And this is the time frame that most people do scalping or day trading within, right? The purpose of the smaller time frame, just like I said, to pinpoint precise entry and then entry and exit point. That's what the small time frame or the short term time frame does. Selecting the right time frame. So guys, we all know that this one is one of the most popular or common questions you get among newbies. What time frame do you do this on? What time frame do you do that on? What time frame do you start from? What time frame do you do this on? So choosing the appropriate time frame for multi-time frame analysis is crucial for tailoring your trading strategy to your specific goals and trading style. So guys, I'll be giving you guys 3 steps or 3 guides to help you understand how to determine which of the time frames you'll be focusing on. All right. So this totally depends on you when you look into all of these 3 guides and answer these questions for yourself. Right. Number one thing is to understand your trading style. What is the trading style you want to dive into? What is the trading style? Are you a swing trader? Are you a day trader, or do you want to scalp? You understand? So if you understand your trading style, you then get to understand what time frames will help you achieve that your trading style goal. Right. So the second thing is align time frame with your trading goals. So I think all of these things are linking to themselves. Align the time frame to your trading goals. If you determine your trading style to be a scalp or to be, whatever thing you want to do, and also have your trading plan laid out, based on what you want to make per social time or within these intervals of the month or the week or the whatever. Once you align all of the trading goals together, you have to align the time frame to suit with it. You cannot be looking to, let's say you cannot be looking to cap daily profit of let's say $10, and then you're also putting on the line let's say maximum of $5 every day, and then you are sitting on the 4 hour time frame to give you entry. That's so delusional, because this time frame and that goal is not going to what work out. It's very, very unlikely to work out because the 4 hour is a higher time frame. So the last and the final thing, this one is something that is I've been ringing in the channel here, and I always tell my students that adjust based on market condition. So we all have our time frame, and we say that this is the time frame we focus on, that's the time frame we focus on, but also the market have the time frame in which they want to show you things on. There are sometimes you hop on a particular time frame or your default time frame, and then it is too congested or too expanded. So you have to, adjust. You have to evolve the time frame. Make sure your mind is dynamic. Just make sure that you don't stay totally attached to a particular time frame. Make sure you have the detachment mentality to also suit in with whatever the market condition is. All right, people. So before we jump into practical example, or before I get to show you guys how I combine time frames and do my own multi-time frame analysis, I want to show you guys the most common combination, and you can also see it, and maybe from there you can also try to devise your own from there, right? So the most common time frame combination for the day trading, right? For those of us that do day trading, we don't want to hold too much, right? For day trading, our primary time frame or the entry time frame should be within the 15 minutes and the 5 minutes, all right? So depend on your goal, just like I said, if you have analyzed or assign your target and then the risk amount, right? Then you get to filter out which of the time frame will suit you to better wait for the entry, depending on your goal, depending on yourself, depending on whatever factor you have to look at before you filter out your time frames, right? You can see that there's an kind of two time frame selection in the common time frames I'm giving to you guys, because this is also to cater for market conditions and also to cater for trading goals. Sometimes you won't find the entry there, you have to come up here. Sometimes you won't find it, you have to come down there, right? So for swing traders, the intermediate time frame is the daily time frame, and then the long term is the weekly time frame. And finally, for the position traders, those of us that want to hold a trade over 6 months and within a year or more, position trading, the primary time frame is the daily time frame. This is where you get to filter your entry, and then the intermediate time frame, when you get to look into more into your trading direction or the overall direction, is the weekly time frame, and the monthly time frame is where you go to look at the overall trend of your asset. For those of us that are looking to do position trading, so the monthly is your direction, the weekly is your intermediate, the daily is your primary. For swing traders, the weekly is our direction, the intermediate is the daily chart, and then 1 hour or 4 hour is the entry. And then for daily time frames, the long term or the trend is on the 4 hour or the daily, and then the intermediate is our 1 hour, and the 5 minutes or 15 minutes is our entry. So guys, you have to look into all of this. You have to also check the boxes I give to you guys. Look into your trading goals. Look into to understand the market conditions, to know what time frame to combine to suit your own trading system. Alright guys, so I hope that was helpful. You all know I'm a day trader, so let's hop on the chat and let me go to show you guys how I do multi-time frame analysis using smart money concept. Let's get started.
Alright guys, for illustration purposes, I'll be using GPUSD and USD card to show you guys how I do multi-time frame analysis with smart money concept. And like I said, make sure you stay dynamic with the time frames. Market conditions tells a lot. And sometimes we use two time frames or combine both to get proper understanding. The whole psychology behind multi-time frame analysis is you getting an in-depth insight of what is going on within your particular world, asset or pair or whatever you're analyzing. So without wasting much of our time, let's ride on. So my daily time frame is my own directional bias time frame or my higher time frame because I'm a day trader. So I'm going to look into the daily time frame, and I'm going to combine both the 1 hour and the 4 hour to look as my intermediate time frame or the medium time frame. And then for me, I use both 1 minute and the 5 minute as my primary time frame or the entry time frame. So I combine these two confirmation with with the both of them for my entry. So from the daily time frame, look at what the overall direction. For those of you who have been following my channel, or for those of you in my trading community, you understand that I am focused on the current side of the market. The current side of the market have the highest probability of playing out. Once you hear that, you know it's highest. All right. So the current side of the market have the highest probability of playing out, so I don't like to go far, to history. So current side, I mean by what? The last two significant swing highs and the last two significant swing lows. Doesn't matter if it's a swing higher high or higher low or lower high or lower high or whatever it is, but just look at the last significant swing highs, which is our last significant swing high, 1 and 2, right? The last two significant swing highs, then the last two significant swing lows. All right. So this is a low. This is also a low, though it is higher low. All right. So these are the last two significant structures we're going to be focusing on. So as a smart money trader, I have to check if it's what a break of structure or a change of character. And clearly, we can see that price broke significantly above the previous swing high. So we can see clearly here we have a break of structure, a break of structure right here. Price significantly broke above and closed, right? So we have a break of structure here, right? And we see that price pull back and collected whatever we want to collect, like liquidity and all of that from here. Price collected all the liquidities here and then mitigated what this particular order flow. So price mitigated this order flow, and that is why we are having this uptrend. And primarily, if you do smart money concept, we know that our next target is for this significant swing high here. This is our next target for USD CAD. All right. So this is our next target for USD CAD. But this is the target from the 1 hour time frame. So from the daily time frame. So we know our daily structure right now is facing what? Having this push high. We are now low. So we're looking toward get here from the daily time frame, right? I go on the 4 hour time frame to get proper understanding of what price is doing, right? Which is our intermediate time frame. So when I hop on the 4 hour time frame, the same psychology or the same mindset of focusing on the current side is what we always do, or is what I always do, right? So the current side, we know we are targeting to this level, right? So the current side we have to focus on, which is here. The last two significant swing highs and the last two significant swing lows are our focal point all of the time. All right. So when we come here, we have to look at what the last two significant swing lows. So on the 4 hour, our last significant swing low is here, right? And then the last significant swing high is here. Then the last one before the last one is here, and then the swing low. This is the last one here, and that is what is currently sponsoring price. All right. So for those of you who are wondering why did I put it here and why not here, if you look at price from behind, you can see that we had what a break of structure right here, and then we had a what I'll have our liquidity collected, price mitigated something here, and then we have another break of structure here again. So this is like primarily trying to show you guys how I do understand or determine the swing points. So this is our swing point here. This is the last swing point. Price mitigated something here. Price, pull back down. Did not collect the swing point. Not there was a shift, so I'm still taking that as my swing point, right? So why I'm taking that as the swing point is because price interaction with price here, we had a break of structure. You can see several times price closed above this one. So we have a burst right here, right? Sorry about that. So we have a boss right there, break of structure right there, right? Price broke structure right there, and you can see that after breaking structure, we have to pull back to collect liquidity, mitigate whatever we want to mitigate, and then continue our trend. So this is what price came to mitigate. This order flow here, the last bearish momentum before what? The break of structure. So this is it. So price mitigated this order flow, and you can see that we are significantly pushing up again. So this is what we have from the what? From the 4 hour. So I'm going to go now to the 1 hour to properly look at the right hand side or the current side to see if there are probabilities of me understanding properly what price is doing. And you can see from the daily we do what? We are targeting price to what? To come up here. The 4 hour is also giving us confluences that yeah, we have to keep going up there. You can see 4 hour is going up. But for our 4 hour, our target is going to be this significant swing highs because we trade from swing point to swing point, right? So our 4 hour target is going to be this significant swing high. So let's go on the 1 hour. Let's go to what? Understand more what price is doing. So when we, like I said, whenever you hop on a different time frame, your focal point is what? The current side of that time frame. The current side of the market on that time frame. So after mitigation, right, the first pullback here becomes for change of structure, right? So after mitigation, we have change of structure here, which is the change of character here on the 1 hour time frame. Then we have price push up, change character, price pull back down, like so, broke this structure again, price went up, and then created this one, and then here, right? So for those of us who were here just now before the news, you have seen that there's an entry here, right? So you have taken trade here. So this is the structure on the 1 hour time frame. So we are currently riding this structure on the 1 hour time frame. You can see that our 4 hour target is here, and then the 1 hour the daily time frame is up here, and we are all looking towards the same direction for now, right? So that is what we have on the 1 hour for now. Price just collected liquidity from this pullback, and we are currently pushing up. So guys, this is how I do the top down analysis using the SMC. All right. So you can see how I rolled from the daily time frame to the 4 hour time frame, and currently we are on the 1 hour time frame. So on the 1 hour time frame, you can see from there like so, we are looking to still what go up here, right? And since we are having an uptrend on this 1 hour time frame here like this, since we're having an uptrend like so, right? We are hopefully what going to keep having the uptrend to help us catch up to what our 4 hour target, right? So when we come on the 1 hour time frame and further into the entry time frames, we see that price is what giving us uptrend structure. we look from the 4 hour that we know that price have to come here from the 4 hour, and also price have to come here from the daily. We know that yes, when we are having a bullish signal to join the buys, it's actually we're going to have more confidence to join the buys, because we have seen from the past that price have to go up, right? And also, for those of us who might be waiting conservatively for the entry, we can still get an entry here. Price can still pull back after taking liquidity. This is a reaction, right? So price can still pull back to this our point of interest, and we can look to execute here if you're looking to execute directly from the 1 hour time frame. All right. So this is what we have currently on USD card based on top-down analysis. All right. So let's look at GPUSD and let's call it a day for this video. Alright people, so this is GPUSD and we are back again on the daily time frame. Like I said, my time frames are the daily for the overall structure, the 4 hour for the medium, also the 1 hour for the medium, and then the 5 minute and 1 minute for the primary, which is the entry time frame. So this is the daily time frame structure right here. And for me, like I always tell you guys, I have to focus on the coin side of the market, which is the last two significant swings I'm having. Alright. So the last two significant swing highs and the last two significant swing lows, whatever price does to them or do or have done to them will tell me what to do next. All right. So on the current side of the market, we have this particular structure. So those of you also that trade price pattern, you can see we also have a clear structure here. So you're going to connect one, two, and then you're going to connect one, two, and you're here. So we are looking at kind of like a structure here to give us continuation to this side. So if you are looking to those people that says I want to change strategy because structure is like, nah, don't change, bro. Understand it, understand it. Then you know that we are all reading almost the same thing all the time. So this is my structure here on the 4 hour time, on the daily time frame, right? And my significant swing point, this is the last significant swing high. This is the last significant swing low. This is currently price where price is, right? So before that swing low, we have this one significantly here. And before this swing high, we have this one significantly here. Here also is a swing high, but it's not yet completed, right? Or it's a swing high actually, it's a swing lower high. It's lower than this previous high. Price has broken through here, so it is confirmed, right? So from what we have from the swing points we have marked up, we can see that here price broke through, right? And we're going to be expecting more buys, but price failed to buy and then broke through this low again. So we have what, a break of structure here, or kind of like a change of character to the downside, because we're looking to buy since price broke here, right? And after breaking that, these are liquidities and price came to mitigate something here. I think the unmitigated shadow up there. So price mitigated the shadow up there, and then from that we started to drop. So from the daily time frame, you can see clearly that our target is here. This is our target from the daily time frame. We should be selling, or the daily time frame, or the daily structure said price should be selling to this level. That's what we have on GBP USD. All right. So let's go to the 4 hour to confirm more internal structures to see if we are going to be seeing stuff to make sense concerning our direction. So this is our 4 hour time frame. After mitigation, right? The first significant pullback is always change of character after mitigating a point of interest. So this is our chalk here, right? Price gave a pullback here, and then price dropped again. We have what, another break of structure here. All right, we have break of structure here. Now, for those of you that understand order flow, you can see that here was kind of like an order flow mitigation, right? That is what sponsored the drop to break the structure again. So price broke that structure here, and then we had another pullback here. We have another push to the downside here. So price again broke this structure to the downside, right? That's what we are currently having on the 4 hour. So let's go to the 1 hour so that we can see in depth what price is doing within all of these structures, right? You can see here was liquidity. So this pullback is also, this one is also a relevant swing. Here was liquidity, price pullback, and then drop to break it again. So this is a break, significant break of structure right here, right? So this is where we are currently, and we want to go on the 1 hour to get more information to see what price is doing and why price is doing what it's doing, right? So these are break of structure here. We have all of these liquidity lines here, and we can see we have a point of interest here from this order block here, right? So we have this order block lined out here, right? And price just mitigated the order block. And since price mitigated order block, we know what our target is here. And what do we have from the daily? We should be selling what to down, down, down. So now we are having our 1 hour time frame and 4 hour time frame also facing down, right? They have reversed to face the downtrend of the 1 hour of the overall trend. So if I want to go, let's just go to 5 minutes on this one so I can quickly show you guys some stuff. Okay, so let's we have after mitigation, first significant pullback is change of character here, right? And after changing the character, you can see that we keep dodging the liquidity and created more liquidity till this level, and then price had a significant pullback. All right, that was a new spike. The significant pullback, if you go back to the left hand side, it came to mitigate what? The unfilled gap in the shadow here. So price came to mitigate the shadow from the 15, sorry, from the 5 minute. Price came to mitigate the shadow right there, right? Just a very sniper entry. So price came to mitigate the shadow, and currently what we are selling towards the 1 hour direction. So this is like, if you're using the lower time frame for entry, you can see this is just 52 pips, and then the target currently is running how many? 300 and something pips, and the target on the 1 hour is here, which is 500 plus. So 1:10. So this is one of like the advantage of multi-time frame analysis. It helps you to tighten your risk and then increase your reward. So guys, I hope this makes sense. I hope, like I said, I'm just trying to show you guys how I do my own, right? So you have to understand the advantage of multi-time analysis. You have to also learn to impute it in your own trading system. Multi-time analysis is effective in any type of trading system you use. If you use indicators, you have to look at price meeting, whatever indicator, the MAs and whatever on different time frames to see an overall trend.
And if you trade price pattern, you have to understand price from the higher time frame, looking pattern within patterns, down to the lower time frame to filter yourself proper entry. So guys, if you enjoyed this video, if it has been helpful and informative to you, please don't forget to like it. Don't forget to subscribe to our channel if you are new. Please say your comment and suggestion in the comment section. Thanks for watching and stay highest.